All right, how's it going, guys? We're going to get into this video here, which is it's really for our followers that are especially VQS customers, but this will help anybody. So what we're going to do, I'm going to kind of split this. I'm going to make a video about getting your level set for intraday. I kind of did a little something like this on TradingView charts about a week ago. But this time I'm going to use the NinjaTrader charts, our VQS system, our Algo, whatever. That's on NinjaTrader 8. So some people just want to be here. They're not going to be using TradingView. The TradingView is easier for me. A few people asked in that last video, and the reason why is I could just draw my support resistance or supply demand, whatever. Some people despise those words. I don't really care. Support resistance lines. TradingView allows me to put them on continuous charts. I don't have to change them every few months, like I have to on NinjaTrader when there's a rollover. Additionally, well, and sometimes the lines get skewed and get funky. But in this case, in the way that I'm going to show everybody to do it today, it's not going to really matter because it's kind of my style. It's the lazy boy way. Real simple on how to just get your levels set on weekly and monthly charts. Weekly and monthly charts. People that are intraday may say, what the hell do I need those for? You'll see when we're done with this. We're going to be just drawing recent swings, horizontal lines, just on our monthly and weekly swings, and the most recent ones. And then we're just going to get back into our daily chart, and that's going to be our macro time frame. On NinjaTrader, I'm going to show you guys how to make those all universal. Also, you should have several different other hotkeys that are universal to all charts and saved that way as default. So when you're analyzing intraday and you're setting up your bias on, hey, if I'm going to be long from here only and short from here only, and where I'm going to take profits, then you're going to be able to see that all the time every day before you start your day. Additionally, if you need to use some highlight tools and things like that, it's going to be just real easy to already have them saved and as hotkeys on your system, so you can just hit them and highlight and maybe make your some decision-making bias or whatever like that. So quick and simple, you set it up one time, so then it's always easy to change from there. So today we're going to be doing this on micro ES. I'm also going to show, and I'll split the video so that this video again doesn't look like I'm attempting to sell an algo and that it's just geared towards my guys and gals, but really whatever I usually do is geared mostly for my guys and gals because that's the only thing I sell, and these are clients of ours at Viper, so we want to think about them first, but then overall we're thinking for all the traders too. And so starting from what you're going to do, the easiest way to get the best swings that for me that I learned from an old Forex guy a long time ago was to go to line charts, line on close, and we're going to go to our monthly. Let's dive into this. And with Ninja, it's really funky. It changes, like every chart will change the data series and everything and the thickness of these lines. So I'm going to have to bear with me as I make some adjustments. For example, these lines. Alright, anyway, I'm just trying to get these tips. To me, wicks, sometime, it matters to some people and doesn't to others, and it makes sense because price did approach there, but where price transacted the most in the open close areas matters the most to me because it's price stayed in that range the most. For that reason, my lines will always be skewed from some other people's lines. The way it's all done, it's not anything picture perfect. It's approximation. And again, just like anything in trading, it's all about an art. There's no science to it, So starting here from our monthly, we want to have already a hotkey saved for our horizontal line. And you want to have, let's say, when you're first starting this off, first you're going to come to a drawing tool and pick the line, horizontal line. I have mine as a F6. I want one touch hotkeys. But what we can do to distinguish them, because you're just going to be doing these real quick so that you do them and you have them done and that you're not lazy about it. Where I got lazy about it is I didn't want to go back to swings from 2-3 years ago. Until price reached that area where it was of significant importance, I didn't want to do it. There was no need to. So we just want to catch all the recent swings. And how we're going to identify what's a monthly or a weekly line is you can change the colors or you can change the thickness. On my trading view here, for example, I changed the thickness. So I know if it's like a thicker line, it's going to be a monthly level. If it's a thinner line, it's a weekly. If a lot of price holds up in between, you can see here where I didn't do them here because I didn't start doing this in this zone here, then I would probably put some daily lines at some point because some of the daily lines will start holding up. A lot of intraday traders think that these levels are something that they're not going to be trading. I had a guy comment to me a long time ago, said, I'm just going to trade what I see intraday. Why do I care about macro? I think over time everybody ends up finding out their own answers because I've asked questions like that too when I was new. So anyway, so in this case, for time-saving reasons of the video, I'm going to just put all blue lines on monthlies and weeklies, and you're just going to see kind of the presentation of it and what it is, and then so you can save time and do it on your own. And over the years, we've really narrowed this down to saving so much more time for ourselves because we used to just have a longer protocol for this. We just don't have that anymore. So we're going to the from the swing highs and lows, which are these points. When you start putting them in smaller time frames, your charts will be kind of messy, hard to read, because this alone is already a lot. Oh, so when you start your first line, as I was saying too, double left click it, and just make sure that you attach it to all charts. Here in the drop down, you set your color and your thickness, and then on template, you want to save it as your default. And so you'll have to do that again if you're going to change the colors when you're going the next round for the weeklies. You'll have to come back in and change the horizontal default lines one time, or maybe the thickness, so that you can distinguish those swings. Okay? So now that I'm kind of done here, more or less, just going to breeze through this, guys. Now we're done on the monthly. You can change this back to candle if you like, because NinjaTrader's kind of funky like that. Candlestick. Now let's go to our daily. Our weekly. And go back to line. Okay, go back to line and see if there's any swings in here that we've missed. There's stuff that we've missed, that there are swings that weren't seen in the monthlies because these stopped in a smaller time frame, which is weeklies, which are still very viable. As we could even see here on this line chart, we bounced off this and we've been, having a lot of weeklies on this micro ES upwards, but anyway, that doesn't matter. What I'll do in this case, since I can do it quickly, is I'll go ahead and make this first line, and then I'll go ahead and I'll just make this, let's say, green. Just for purposes of demonstration here, I'll just put sea green, whatever. And let me reduce the thickness down to a 1. That's it. That'll be our weekly swings. And I'm just going to save this for now, just because I'm going to need it simultaneously with my hotkeys. So I'm going to go around. I don't have to go too far back. Remember, you don't want too much clutter, because you're using a line that's going to go all the way across your chart, and so when you get to your current time, you're going to have just too much on your chart. So just grab the last swings that you can, that you see that are relatively important, most recent ones, and just stop right there. Put it back on candle, go back to your dailies now, and let me fix the thickness on this because I reduced it because of that line on close chart to get some precision on it. Let's do that. Will that be enough? 6. Let's go to 7. Just get this nice and clean, and then we'll continue with what we're talking about. Alright, cool. So basically, what we've had, and at some point somewhere I must have missed a monthly swing somewhere, because really what I had was something relative to this. My trading view, I keep it much cleaner on there. Alright, let's get this here. You got a blue line in here, a dark one. If I can remember the color. Let's say blue. I don't know if it was like a Was it a 4? Yeah, something like this. Okay, whatever. So between the monthly and weekly, we see that we've been, since like December, mid-December of last year, now we're almost 4 weeks into this, 3 weeks. We see that we've been in this range, okay? Up and down swings off high time frames where big money is working, taking defense in each side. And we've also heard that in these markets, right, that 70, 80, 90% of the time we're ranging. If you guys watch a lot of the YouTube out there, there's some guys out there that are really good at showing this. Just trading SPY alone, for example. You know, you can, markets range until they don't. They'll pop up and break out of it because price has been accepted for several weeks by big, large money. A lot of intraday people are in between these bars, fighting and puking and doing whatever, making their money. And then we have a break, and then we have a new accepted range. Sometimes it's short-lived because it's too high or too low. It's not accepted well. They're going to come right back into something of acceptance. And sometimes, of course, you're going to have bigger range, bigger, wider candles within them. Sometimes it's going to be hard to predict. You know, news and other things change markets. But overall, you'll see that, for the most part, you're always going to be in these ranges for like a week, 2 weeks, and then you're going to break out into new acceptance ranges of price, break on back out into new acceptance of price. Of course, you'll have some, again, parabolic crazy days, which, you know, if you write it with your algo or something like this, just knowing what the day is, when you come in here every day, this is how you're going to start your day. Before you get in, you're going to look at this chart, and you're just going to estimate already where the market's been during European session, speaking to U.S. cash purposes here, and you're going to assess the situation and go from there. Now, a lot of times in these ranges, when we get like yesterday was Friday, January 6th, we started our afternoon, our evening Globex session here, smack in the middle. Prices had gone up, I believe, and right before the open, prices were back in this middle again, and it was very hard to trade at that moment. I think, obviously, the markets did something funky like this, like they always do. You can call them liquidity grabs or whatever, first thing in the morning. Let me get to this chart here. We did a quick, there was economic data that went up. Obviously, we came down and did a quick liquidity grab. This liquidity grab can be seen sometimes even more cleaner when you look at order flow and stuff, which I use Bookmap, and I'm even at Bookmap as a moderator now. Anyway, and looking forward to growing there too. But we came down here to make sure that a lot of these guys did not have it that easy. They didn't just buy and they were going to walk away all day. However, although the market gave that again opportunity later. But we'll always see that these liquidity grabs come in. But other than that, once the market opened, it was a straight up rally up to this area here, and then it broke out. We knew what breakout was imminent. We've been talking about it. I believe I even put it in my Discord, where I moderate in Bookmap 3 days in a row. These ranges that we've been in this range, we've accepted this range too long that we're gonna break. And if I'm not mistaken, I called up towards the upside most likely, just because with option expirations too and other nuances and equities that you guys have to slowly, you'll understand if you don't, that there's people buying to cover where is the market maker positions and things like this. So you'll kind of pick off other people and understand where is it most likely if it's gonna go. The rally started real quick, and there was good economical news. There was a lot of things fueling that this thing was going to go higher, and once it got there, it was just going to break. It was a matter of time, and sometimes people feel a little deceived in these spots. So did I a bit, because in the middle of things, I lost a little traction of where I was, and I also look at Bookmap and do a lot of discretion myself, even though we have automation. Our users know that I do a lot of that. So, but regardless, nonetheless, and I'll show a kind of a glimpse of this because I don't want to make this the emphasis for everybody watching this particular video. The second part of this is going to be for our VQS traders, which is our simple code. I don't want to say too simple, but it's a pretty simple, cost-effective entry algo that's trend-based using Gaussian logic. And that's the main logic, and we have a couple of filters in there that we built for the users over time. A user-defined EMA filter and a VWAP filter for directional bias, just so if you feel you don't want to take trades, if you're long only and you choose long only, but you don't want to take the trade while the price is still a little too underpriced, maybe in case price turns back on you, you're iffy about your bias. But here we can see about half an hour after the open when I was talking about here, even on an 8x4 Renko, which is the next video I'm going to be putting on after this for our users on how to use this, how we could have used this VQS system we have to have gone long with our long bias. After the markets came here and got this liquidity overnight grab, psyched all these longs out that were early on this economic data. I said, hell yeah, I'm long all day. That happens sometime. You just get a rocket and it never comes down. But they've been doing this classic move and came down, grabbed this liquidity, grabbed all these short liquidity inventory there, and then they took off themselves. So, but we could see that based on our lines, we had swing low and swing high on monthlies here, and this was a nice 50-point play. So, you know, that's on one contract of micro ES. It was a good move. Now, were you going to get all of it? Who knows? One of the things, and my mentor always teaches this, that you want to do when you're in these ranges like this, most people, and if obviously you could put a volume profile on it or do whatever you want, you're going to notice the prices stop a lot in these midpoints. That's obviously where a lot of liquidity takes place. And people that sell from the tops or buy from the bottoms transact the most liquidity there to get out. So you definitely want to make your target really over there to not be greedy and be safe. You'll find out that 7, 8, 9 times out of 10 that you'll be glad you did, and it'll give you so much the rest of your time rather than just sit there and try to, I don't want to, use the word greed and get more through the rest of the day. You'll end up giving more back when price starts getting all funky on us. You know, so because again, they halt, they grab their liquidity again, and then they're going to move. But in that time, there's a lot of tremors and scalpers get killed. So you got to be careful. I like scalping, but really using the order book and still working myself on that as far as consistency. We find out a lot of times that we leave on doing discretional trading and that we had a mechanical and automated system, that most likely we're always going to have a better day than what we did on our own, because there's no emotion involved already in this system. Again, I'll save that video for later, but as you see these lines, this was the price action of Friday. We hit from one level to another, and we could have said could have been our target to our midpoints. Still was a lot of points. I mean, on a 1 micro, this was 30 points to the mid move, 60 to the upside or more, especially with that afternoon breakout. Would automation have made this day great? Yeah, and I'm going to show that. All right, so this is how you want to be every day. Sorry, guys, I'm not a super YouTube professional. Again, I keep things pretty legit here. I don't script anything I say. I just have it in my mind that I have to do this, and I come out here and I just do these videos. So this is why it's important to look at macro time frame for an intraday trader. So to answer some questions that some people might feel about that and say, well, isn't there a different way to gauge different kind of indicators, or just screw all this alone and then just be a footprint chart trader? And, you know, this guy came on YouTube and he does all these massive commercials and he says that retail traders suck and all that. Well, frankly, maybe he sucks ass, because it's not fair that people come out and talk crap on a bunch of retail traders. We're all retail traders, and we're all in this together. And we have a lot of great tools to have a good edge. So these guys that are coming and saying, oh, I used to do this, I used to former trader the floor, why aren't they there anymore? You know, they're not there no more for a reason. We have the digital edge. We have the digital technology here in front of us to kick some ass, get an edge, keep it simple, don't overanalyze, and make a few coin. You know what I mean? So, you know, I'm kind of against the guys that talk shit. I like learning institutional tools, but I don't think that they're so much institutional no more. Those guys have gone off into quantitative trading beyond some of the simple algos we do, right? So we have opportunity to say that we're pretty damn good too. We just have to control our minds, and that's another topic, and we all have a little degree of that problem. Okay, so with that said, this is what you would do, and you would save this, And and if you want to add just extra lines for your, some of the more guys that are more professional, prior day high, low, and the settled price from the day before, because it is pretty viable, and I'll show you why. Again, I try to do things the lazy way, unfortunately, because I still think it's viable, but I try to do them the lazy way. So here on TradingView, after I have my charts here drawn, and I got these lines locked up and all universal to go across all the other charts, this is my dailies, right? Again, this is the S&P, this is the mini. So you can do your lines and everything like on the mini and then trade the micro. Let's go ahead and expand this. So here's my like a 5-minute, and we can see like this indicator here with labels. I have prior day high, low. I have weekly levels, prior day, weekly close, open, highs and lows, and also I can add monthly. I don't want to do that. On this one, I updated it to be a little less clutter and just kind of, because the weekly ranges are very important intraday. They're going to tag usually first and bounce around when they're in their ranges so we can see. Quick example, the prior week close was totally disrespected. It meant nothing. But like when we had that pop yesterday, you guys could all take a look back and take a look at this January 6th, Friday. Non-farm payroll or some crap went off. Sorry, Jolt's job openings and something else. So when it popped up pre-market, came back down, tested, grabbed a lot of that, most of that liquidity, pretty much took out almost all that liquidity. But look where it bounced off of to the tick, like, the prior day close. Came back up, just kind of, again, supported by the open, and these are all set up by Globex open times. So it's 24-hour basis. So, came in, bounced off that 38.29 yesterday, the settle price and the open price. And we took off. Again, weekly close of last week didn't really matter. It was because we've been in such a range. So the, closes in the middle, that means something to you about what we were talking about earlier, where prices usually tend to stick. So that kind of could validate that information I said earlier. When we broke the prior day high, it usually becomes that support. Never came back in. No momentum was coming in. I even took a stop here. I thought I was going to come in for a fade and I got hit. But again, it was a very strong day. The algo beat me. Anyway, but, and when we broke that weekly open, everything just rallied on up. Now, of course, other people in different groups are going to give different reasons again why this happened, and because the options and the expirations and the gamma guys and the market makers it's all true, but you don't have to know it all. That's my whole point, is that you guys don't have to know. I've been all around 500 zillion things, and it's taken me a longer time to be consistent because of knowing it all. Just know the basics. Make your own lines. Have your own vision. And if you want to add maybe a couple of these things, this is fine, because everyone else is looking at this as a legitimate data. It's not like specifically an indicator. It's an indicator that's just every day printing up all my levels for me as far as the prior day and all that stuff, the settle price and the open price. So I don't have to cut. It just saves me a little bit more time on my pre-game plan coming in, because I've already done my macro levels. And so that's kind of where I start. And this is where it is. This is where the simplicity is. When you do that on any kind of market up there, guys and gals, you can swing trade your options if it's in your capital efficiency. You can do future spreads with this. You can put this stuff on spreads. I was known for doing spreads for a long time, and then up until COVID came, I got into the algorithmic project, left my other business that I had, and came into intraday. Really was focused on the algorithmic project. So, but something had to be taken charge of, and the best way to do it was eliminate a lot of the other things I had, and this is my base point. This is how my base point starts, and then whatever else I'm adding, because for years I wanted to learn order flow with Jigsaw Peter Davis. I know him, not too personally, but we know of each other through media and stuff and conversations we've had, and I have his products since 2016. But when Bookmap came out, and a trader I know down in Australia introduced it to me over a year ago, I was really entertained, very entertained. Put a visualization on the flow for me. So I use that as my discretion trading or scalping or quick little 5-10 points on ES. it's my preference. I like it. It's my passion, so I do that. Additionally, I'm even there during the day, mornings, Central 8 to 11. You can find me there. My name is Trader Pete. And there's like a blue Bookmap tag on me to identify where I am. And so, but I'm always starting with this. This is my game plan in the day. And if it starts in the middle, I've done it a lot of times and got burned. My mentor catches me. I talk to him every day as a friend. And he said, "Why'd you start on the damn middle?" So, there's a saying, don't fiddle in the middle. And whenever he says it, my stomach turns because I'm already pissed. But I can't be pissed at him. I've got to be pissed at myself. So and same with all of you guys. Sometimes these algo things don't work or whatever. You get all upset. And the thing is you're not. Most of the time, you're probably alone, but not alone in the sense that how do I say this? We all have internal mental anxiety or something, or some kind of neurosis or this or that with the mind. Okay. Again, I'm not going to get into psychology talk. I'm not even a doctor, but there's a ton more traders, believe it or not, that are doing well with the system. They stay in discretion. Some of them text message me, and they love it. And so why does it work for someone and it doesn't work for somebody else? It's your setups, or your bias. And this is very important before you come in. I had somebody, and I don't want to give names or put anybody on the spot, but somebody said, your algo don't work for me because I need to be at 10 tick stops on crude no matter what. Well, you can't. You have to, and this comes in line with knowing your market. You have to know your damn market. I mean, like, crude oil has had 50% swings up and down to $5 targets since COVID or something like this, when it got all volatile and all these wars and whatever's going on. I haven't seen 13 tick stops and stuff practical in quite a while. Yes, it's been really tough unless you're on the order books and you're scalping in there really, really well, or you're in automation and you give yourself room. Another thing I want to mention, guys, is and it's one of my weaknesses too, is the micros. There's always micros. You can get in micros and be more consistent, and you can have more fun trading because it takes away the anxiety. To me, it gets me bored. It makes me go back to minis, and then I tend to get more anxiety from it because of the cost. Every little down move or 5-point sweep on you just costs you $250. And so, consider micros. Some of you guys want to pass these evaluations really quickly. I also do evaluations and use other people's money. I like using other people's money in a lot of things. But the thing is I tend to screw them up when I'm on minis, because you can only mess up so many times. And if you lose sense of where you are in your bias intraday, before you even start your day, you're already on the bad start. And so, you get 3 stops right away. You're down $900. Now, what do you get? How are you going to come out of that? And you get violent and retaliate. All that bad stuff comes up from it. So if you want to, and put a little skin in the game, like some of our good successful traders are doing, they're on micros on the VQS, for example. Once they get their bias, whatever they do, we have some very smart VQS clients. They message me all kind of smart things, what their setups are, how they're setting up their day before they hit this. And half the stuff, sometimes I don't know what they're saying, because that's their style. They're using things and saying, Peter, this and that, and I'm doing that, and then I'm going in, it's working great. So you gotta, this is an important video to get your grounds, because if you don't have this, and by the way, this is another kind of way I look at, I test different things, but that's the most important thing. I mean, if you were to put these on a weekly profile, look at where these lines all sit. Look where that midpoint line sat. Look at the static, do we call this static profile here, right? Look where all the points controls were, supported all the tops and bottoms. And so look how these lines just beautifully fit. And so in other words is, these lines are going to make up like 50 different people's indicators. These natural made lines by you. And so you really just don't need anything else. Everything else kind of beautifies things and subjectivity, whatever. But really, these lines are going to help you a lot with your day. So that's how you're going to be set up. put them on. And what else do I want to talk to you guys about? Let's look back. Look back on a 5-minute. Look at these lines. And these are coming from swings that even were happening weeks before. So, you know, there is this. There's other options too, but this is one of the key things that you guys should all do. I recommend you do. You're gonna find, if you're not doing it now, and you're gonna still stick around and be a trader years from now, you're gonna end up finding at some point you're doing this, because you're gonna be tired of all the 570 million, 5 different versions of stuff you've downloaded in your NinjaTrader from the ecosystem, from those forums. Your computer's gonna crash about 3-4 times. You're gonna call NinjaTrader. You're gonna blame them in a weird way, you know. Well, yeah, and then they're going to help you because they're really good and their customer service is good, so they're going to help you. And then you're going to start slowly as you become a thick-skinned veteran trader. Not even successful yet. We're talking like not even the consistency yet, but you're consistently coming every day for years. You're going to find that you're going to get more bare bone and more bare bone and more bare bone. And so, I mean, you know, intraday, you just use these levels, and then, yeah, you can go in and trade your flow after that. Come in, or again, use an algo for entry. I tell people when we were doing those commercials, and I kind of down on that now. You know, you do these commercials showing if it was full auto, what it would have done. I'm the only guy that shows my face on these channels. There's guys selling stuff for 10 grand. They hide. They don't accept comments. They don't tell you where you can be found. Everybody could Google my name and know where I could be found. So I got nothing to freaking hide. I make it affordable for everybody for a reason. It puts a little coin in my pocket to keep this business flowing, and then to make friends and stuff. This system, I didn't want to go on a rant on a video that has to do with finding your levels, guys. Sorry, I take that back, but I will say that it's a great system for somebody that knows their levels and just wants to get in. And most of the time maybe hesitates that perfect in. There's not a perfect in sometimes, or you turn your head this way, the wife says something, and there was your in. So algorithmic trading for us, for most retailers, could be the entry management. And then we're using the brackets that we normally would have in our judgment of where we are, where's price, for targets. And sometimes it's not going to always work. You're going to find that sometimes you're going to love these ranges. I get a lot of people that complain when there's ranges. Well, when there was ranges up here at this top here, it was tough. And this was a week where a lot of people during holidays bought Viper VQS. They were going all full auto. And they were complaining, oh man, what the hell? Well, if you knew we're in this, and there's probably another swing here, you still could have capitalized on it. There's enough room but it's going to be a scalp world. You're going to be really short trades, but you could. This was like the end of the week of November, but you know, when you get your price expansions, you know, when you get your breaks, that's usually when you'll usually be wrong. Like finally yesterday, a little break was due, and we don't know if this is going to trap people and come back down the other way. But all we know is how we're going to use it again is when we get to one level, we're only going to be looking for the opposite, okay? When we get to one next level, we're going to look for opposites until market tells us something else. And once we do that, then we're just going to go along with it. We're going to flow. So you're not going to have every day perfect. I don't. Nobody does. That's just, it doesn't exist. But you're going to have a lot more consistency. And you're going to feel confident in yourself and proud of yourself that you're doing this. You know, with these kind of levels of trading, I have it on SPY. Swing trade SPY. You know, it's not always going to work. You can get trapped up in it. If you put a trade on SPY sometime, when price gets to these levels, you can get trapped up in them. You know, you go out, leave for the day because it's just maybe a single lot or something. And depending on your time frame of your expiry, maybe you're done. You got to take a hit. But most of the times when you get to the extreme levels, okay, the extreme levels, this one is a 200 moving average here, by the way, guys. You can then really capitalize on holding for several days. And out of one contract makes so much. You don't have to be sitting there scalping SPY options, let alone you have to have money to not be in the pattern day trading with SPY options, right? So SPY is an option. It's derivative of the ES for you futures traders, and it's equivalent to like a micro ES in price, more or less, like about 10% of the ES. To kind of long story short and make it simple. But you can see this time and time again, you know, these ranges. Sometimes they're going to blow on you, but you're going to get, you know, a lot of good opportunities. High probability setups. I did this with spreads for a long time till spreads, you know, became capital inefficient for me. Managing them, the margins went up on them. It just takes a lot more money to hold them. I'd be more than happy to do it for a family office. In other words, a rich private hedge fund. But there's no. I wish there was performance accounts that would let us spread. You know, hold positions overnight. I'd be murdering it. You know, they make things harder because they're trying to protect that little 45-minute a day margin that they have to carry over all you traders' accounts and those evals. But here's the deal: if were able to hold positions for those guys, you have even easier opportunity. It just gets even easier. So that's about it. That's my video for the weekend. I'm gonna make another video after this. I gotta make for the guys and gals that are VQS, a public one, to show how it performed hypothetically yesterday, because yesterday I was on Bookmap. So how it would have performed on micro ES with 2 lots with a standard stops. That's the other thing. You guys have to do a little assessment on your ATRs and your range bars and stuff, or your exotic bars that you're using to determine your stop points. And then if it's too expensive, you got to do micros. And then if micros is not available, then you got to ask yourself, you know the answer, right? So, all right, everybody, have a good one. I hope this video helped you. This should be able to get you guys really set up on your levels and get your bias started in the day, get your bias started in the week, or get your bias started in your swing trade for any kind of trade, for any kind of market, for stocks, for futures, for commodities, for currencies, hell, probably even crypto. I haven't really looked too much, but I'm pretty sure those prices are very respected and leveled out too. All right, everybody, have a good weekend. Thanks for watching.